I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, friend, colleague, co-owner of all the other things, Mr. Nick Hodge, who's also an investor and publisher of Daily Profit Cycle. This is the 205th episode of our weekly therapy session that we like to call Investing in Bizarro World. We're going to talk markets. We're going to talk what we're investing in. We're going to talk about the week that was, a lot going on, tragedy in Turkey. Heart goes out to everybody out there. We'll talk about Joe Biden trying to incite a Let's Go Brandon chant. We'll talk about gold M&A. We'll talk private placements. We'll talk about $15 hand washing classes. But before we talk about all of that, Nick, how are you today, sir?
Wearing all the hats, Gerardo, as I know you do too. So staying busy. It was a monthly issue week, and deals are sometimes feast or famine. So looking at a couple of new deals, we should talk about private placements as well, by the way, and why they're advantageous for certain investors, and then how you can potentially, how you can participate in them yourself. Other than that, doing good. How are you?
Love it. I'm well. Allergies are better this week. We're not frozen in. We haven't lost power. Things are trending in the right direction. I'm excited by some of the deal flow here recently. And I think, look, we're going to talk gold, or we're going to talk gold M&A. But I think before we get into it, I think private placements and deal flow is a great place to start. I know you and I just had a couple of discussions earlier this week and earlier today about a few new private deals that we like. Early stage companies with tiny market caps, tiny floats, good solid share structure. What is a non-traditional resource play that I'll keep to myself because you guys will figure it out if I tell you. And we're working on helping finance that vehicle. And then the other is a uranium play that's got some great leadership, a strong-looking asset, a phenomenal share structure, and I think can trade much higher. So I say all that to say that a large reason of why we did so well last year was how well we did with private placements. And I don't say that to brag. I don't say that to rub that in anyone's face. But, anytime you have a deal like a Patriot Battery Metals, all you need is one of those every couple of years. And if you put substantial amount of capital in there, you're going to do very, very well. But what gets a Patriot Battery Metals, to go from a 16-cent company to an $18 company or a $17 company? Well, there's many different boxes that you want to check off early on if there's even the potential, right? Even the potential to get to a world-class discovery like the Corvette Lithium District is. And, some of those boxes that for me personally, I like to check off is a solid share structure, experience management, gotta have scale. I can't preach this enough. I really am being so much more cautious with my dollars and making sure that I'm more aggressive when I invest in projects. But that those dollars, those aggressive dollars, are only going to projects that have scale. My favorite copper play for the next 2 or 3 years, Nick. I know that's a company that I think in the next month or two we're also going to finance once again. If you don't have scale, you're limiting your upside. And there's nothing wrong with 200% or 300%. You'll do very well if you continuously pick 200 and 300% winners. But man, you get a 10,000% winner. You're not doing that with a company that doesn't have the potential for large scale. It's hard enough betting on geology. It's hard enough betting on jurisdiction. You're really handicapping yourself if you're not picking companies with the potential for large scale. And so I just wanted to lead with that and, kind of pick your thoughts on what you look at and what you check for when you're writing checks. Because again, we eat our own cooking. Let's be honest, you and I made, a whole heck of a lot more the last couple of years from our personal investments than anything else. And that's not to say that the other stuff isn't great and I'm not thankful for it. It's awesome. But it feels good to win alongside subscribers. And I am proud of that. I know you are too as well.
Yeah, I mean, I look for many of the same things. We were, both mentored by the same individual. I'm big on share structure, big on jurisdiction, and which is increasingly important in the world we live in. Just before we started recording this podcast, there was a Bloomberg article out talking about how the U.S. was eventually going to sanction Russian uranium, for example. And so, important to look where those assets are located, as well as how they're structured, and then where they fit in the overall trends of things, right? Try to invest in things that have the trend going as well, right? Patriot Battery Metals, which we've talked about a lot, might not have been successful if uranium wasn't doubling year over year and up 1,000% in the past 5 years, right?
Lithium.
Lithium, yeah. Sorry,
Yeah.
what did I say?
Uranium, but that's okay.
Well, that too. That's going up too. So
I like big assets too, by the way, Nick. Love big assets. Cannot lie.
You gotta make sure you get the overall trend right too. So and trends come and go. I've had success with cannabis deals in the past. With real estate deals, with deals in other sectors, technology or biotech or whatever. So you need to make sure that the trend is your friend, as they say, and if you're getting into deals that they fit somewhere within the trends that are going up. What I wanted to discuss, and I'll kick it back to you, is sort of how you get started, right? So, and it stepped from a conversation I was having with the publishing team that we have here, and we were trying to discuss how we wanted to write about private placements and how you can get people into private placements. And I was saying, well, it's not like someone knocks on your door and says, hey, here's this private placement, like you should participate, right? You have to, first of all, know that they exist, which, some investors, and in fact, probably the majority of investors, might not be familiar with how that works.
Right.
And then you have to be accredited, of course, at least for true private placements, right, which means you meet certain definitions, and there's a lot of them, probably 15 or so different ways you can be an accredited investor, or meet the friends and family exemption, or whatever it is, right? There's different things, but the most straightforward way is to make $200,000 a year in income by yourself, $300,000 with a spouse, have $1 million in net assets, right? $1 million net worth, not including your house.
Or you can just check a box.
Well, so that's sort of like, you almost got to tiptoe around that, right? So I was going to ask you, and I'm happy to share my story as well, but I guess I'll just share mine first, and then you can talk about it. So, and it goes like this: like we each write a monthly letter, we each write a more speculative letter or a trading letter, and then we have a private placement service. So, if someone's coming in, they see an ad for your uranium promo or my lithium promo, and they sign up for $99, right? How do they get from there to writing a check into a private placement? And for me, it was just learning over time, right? Learning the hard way, in fact, right? Because in the junior mining space, one of the things that some companies look for in some promotional teams is liquidity, particularly 4 months after they've done a recent private placement, right? And to take a step back and explain that for a second, some companies aren't mining anything but shareholders' pockets, right? And they raise capital, they do private placements to fund their salaries, essentially, not to put it in the ground to work, not to make acquisitions, not to increase shareholder and stakeholder value, but to keep the lights on and to keep the gas in there. I like to say BMWs or Audis or whatever it is, right? To fund their lifestyle. And traditionally, those private placements have a 4-month hold time, after which they can sell their shares. And so if they do a raise in January, in April, they can sell their shares 4 months later. And
it's a hell of an April Fool's joke.
And I was a newsletter writer, right? That could tell people to buy stock, and was figuring out almost by reverse engineering, and then by making friends with some smarter people than me, that these companies were, using me to essentially to create liquidity to sell their private placement shares when they became free trading. So, and that's one side of the thing. So I started to figure that out. But an average Joe investor, I don't think is going to figure that out. And then the other part is, how do you start doing them, right? So just by as a function of being a newsletter writer, it's probably been 8 or 10 years ago now, I had a colleague of mine offer me a private placement. And he was saying, this is a good silver company. It's still private, by the way, after all these years, but I think it's actually going public this year. It has quite a good asset. But he's saying, I think this is going to be a good speculation. You should, and it's a good group of guys I've known for a while. You should participate. And I was thinking to myself, well, I don't even know how to do that, right? So I guess I had to rely on my network to say, okay, well, what does that entail? Well, you got to fill out the subscription agreement. So, okay, well, and then what? Well, you get the share certificate, either a physical certificate, which they still do exist,
Yeah, got a
Or
bunch right here.
you know what? I just actually FedEx one today. I had one on my desk too. Uh, or you get the DRS, the direct registration statement, which is hosted by some transfer agent, typically Computer Share, or there's a couple of others of them around. And you've got to get those shares deposited, get the legend removed because that's they're exempt securities, they're restricted, and a lot goes into that. So I had to learn all that through my network, get the account set up, et cetera. And so anyway, I'm getting a little long-winded, but back to your point, check the box. Yeah, there's which one of these reasons makes you eligible to participate, essentially? Do you make this much money? Do you have this much assets? Do you run a trust? There's a bunch of them. And the onus is essentially on you. I mean, this isn't a list or a document that's checked by third parties. You see it, and the company that you're investing in sees it. And so at the risk of getting hauled off to jail, when I was doing my first private placements, I was checking the box, right? I may or may not have met the requirements for the box that I was checking, but you got to get your foot in the door somehow, right? And so I guess that's my initial story. And then once you've done it a couple of times, then it becomes sort of, almost second hat. You just held up a share certificate. I've got a stack of subscription documents on my desk that I got to fill out after this, right? For another deal. And so it is what it is. It's a 50-page document. I know what pages to sign. I know where I have to check. I know that, I know how to register shares. In the first couple of deals I did, I registered in my broker's name and not in my name, and that's like a no-no. So there's all these different things that you learn along the way. And so I've been talking for a while, but anyway, like if you were talking to someone about one of your Junior Resource Monthly readers, for example, how would you explain to them how and why they should be doing private placements?
I would say this, and I'll share my personal story, and then I'll word it somewhat creatively. But listen, I recall my very first private placement, reading through the requirements, right, and going, well, technically speaking, I'm not making the amount of money that's required to do this, but I do have enough equity in real estate where if I wanted to, I could. And so that's a long way of explaining to you that sometimes you got to get creative with the technicalities on things. Never do anything illegal. Always consult your attorney. But, there are different ways to measure liquidity, and those agreements specify what you can and can't use. And so there's multiple ways to kind of get to meeting that threshold. How I would explain it to someone that subscribes to Junior Resource Monthly, which is a monthly service that, charges, a couple of $100 a year, and takes a mid to long-term view on megatrends and ways to leverage those megatrends in your favor to hopefully make money on, speculative resource stocks. I would say every public or private company during the course of its life will issue shares in exchange for dollars, right? And so you as the shareholder, if you have the network, if you have the access, if you have the contacts, can reach out to said company and say, I really like the potential here. I understand the risk. I'm willing to sign off on understanding the risk. And this is how much of my risk capital I'm willing to allocate to help fund the plans for the company that I think has potential. And if you're right and you get that right and the company does well by you, then you not only get the benefit of being able to get favorable treatments on the share price usually, but you also get the bonus of either a half a warrant or a full warrant, which gives you the right but not the obligation to buy another share at a fixed price. Now, let me provide some context on why it's so valuable. When we financed Patriot Battery Metals initially in JRI, and I wrote a pretty significant check, it not only was a 16-cent financing, it came with a warrant, a full warrant. It gave me the right to buy another share for every share that I bought in the private placement at a fixed price of 25 cents. And that was good for 2 years, right? And I think by the time I exercised those warrants, the stock was somewhere in the $3 or $4 range, right? I have quite a few 75-cent warrants that I should exercise in the next few months because I think the company gets bought out in the next 12. And so I want to get, the time ticking on that. And then we'll explain long-term and short-term capital gains here in a second. But That initial investment in Patriot and that subsequent 34-cent financing with the 75-cent warrant, that warrant has meant, I don't want to say the amount, but it has a life-changing amount for me. And the return that I've received from my initial just shares of Patriot has been a life-changing amount. But man, you compound that with the ability to buy an equal amount of shares at 25 and 75 cents, and you get that fixed price for years. You just simply can't find that with other risk asset classes, right? You can't buy a bar of gold and, simultaneously get an offer, a lottery ticket in essence, to be able to buy another bar of gold in 2 or 3 years at the same price or at a fixed price. And so that's something that's really unique with private placements. It provides you a better shot at the speculation working out for you. And then, the rest of it is just really, you have to check the boxes. Like, what are you looking for? What's your risk timeline? Are you willing to lose all your money? Is the trend your friend? Are you willing to be a contrarian? What does that mean to you? I mean, all of these things. So many of my positions, including Patriot, were down 50% at one time. It's a 10,000% gain for me. Not counting the warrant. You add the warrant, it's something ridiculous, right? But at one point, Patriot was down 50% and had a gold property, and we wrote those checks because the company had an awesome lithium district that we thought was high potential, and they decided wisely to pivot into the lithium sector. So again, that's kind of my personal story. That's how I would explain it. We, the check writers, become the funding vehicle for said company to go and execute on its business model. And hopefully, if the business model is executed correctly and Mother Nature and geology is kind to us, then, we not only get the benefit of a higher share price that we can sell whenever we're ready to sell and take profits, but we also get that luxury, and it really is a luxury, of being able to buy another share at a predetermined price for a fixed amount of time. And in the junior resource space, you take, again, a Patriot where lithium was hot, 2 years is infinity. 2 years is infinity. You make a world-class discovery like the company did, and your 75-cent warrant turns into an $18 share price really, really quickly. People forget this was just December. This was a year and 2 months ago that we wrote that last 34-cent check, and I think it was maybe a year and 4 months ago that we wrote that 16-cent check. And it seems like another planet ago, right? But it hasn't even been the 2 years. Those warrants are still good to go.
I don't even think it was called Patriot Battery then. I believe it was called Gaia Metals.
Gaia Metals.
And so you mentioned if the geology cooperates, and, we tend to do primarily mining deals. And so we should explain that for a second. We're going to end up doing the whole podcast about private placements, which is okay with me.
It's fine. Let's do it.
Because mining companies, the early stage ones, aren't generating cash flows, right? They have to explore, they have to acquire properties, they have to drill, hopefully. And then they have to permit, and all of that requires capital, which they don't have because they're not selling anything. So this is not primarily, but the junior mining sector specifically, all these junior mining companies need funding, and so they're all doing private placements. That's not to say other industries don't do private placements, but other industries are different in that they could potentially be generating revenue from an early stage. And so 2 things I wanted to ask. Let me see if I can get them both out, or maybe not ask, but discuss. One is there's all sorts of different classes of private deals now, right? So, lots of investors were seeing, as evidenced by Patriot Battery Metals, how well you can do in a private placement. And then there was also some changes in legislation, right? There was the Jobs Act that allowed crowdfunding deals where you didn't have to be accredited. And then lots of companies started raising money because you could raise it from anybody. But if you could raise it from anybody, is it really a private deal? Is it really a private placement? Or is it just a different way to sell shares? For me, it's kind of the latter. And I haven't done too many of those deals. And I've seen some that stay private, right? You can raise money privately and then they don't go public. And then there's no way to get your capital out other than to sell your shares to another prospective, private shareholder. So that's one thing. I don't know if you want to talk about any of that, but and then the other thing was, how early stage do you like to be? I mean, and I'll answer first. I mean, you want to be as early as possible. Is the easy answer, right? Potentially when they're private, ahead of a go public round. or early stage when they have still a tight share structure or have recently rolled it back and have a low valuation relative to what you think they could accomplish based on the plan that they tell you they're going to execute with the capital that you're giving them. And so those are the type of deals that I like to be in. Again, there's lifestyle companies that have been around for a decade or longer, and they're funding themselves all the time. But you end up getting diluted out, right? If you stick with them for too long, because they are fundraising all the time, or you end up getting rolled back, right? Where they do a share consolidation and you have many fewer shares than you had before they had to consolidate. So any thoughts on that stuff?
I think you did a great job outlining the fact that there's a risk to everything, right? And some of those risks are important to highlight. If you're funding a company on the private side of it and they have a plan to go public, look, I have 4 share certificates of a private company or private companies that were supposed to be public a year and a half or 2 ago. And either, the commodity price didn't cooperate, or the asset that was going to be the qualifying asset to take it public didn't work out, or simply they just don't feel it's time to go to market. My capital is stuck in that safe, right? It's stuck in a box. And so that's one of the risks. And you mentioned that, and that's possible. So it's important to always start with your checklist of the risks you're willing to take. And some of those risks include getting your capital tied up. Another risk is, well, it does go public, but the market turns and now you're not in the right sector, or you're not, riding the right trend because you waited too long. And now you have maybe, half of your money's gone, or at least half of your money's disappeared for the time being until the company rights that ship, right? That's possible. And look, sometimes you can have a hot lithium trend. You can have great management, and sometimes you go look and simply it's not there. And that happens more often than not. And so I think it all goes back to how we were taught, Nick, the importance of share structure. A good, solid, tight share structure will forgive mistakes and or will forgive the geology not cooperating with you, right? In the case of Patriot, it was Gaia Metals at the time. It wasn't the best share structure, but I knew it was good enough that it could forgive at least one mistake or one miss. And Gaia missed. They had the Freeman gold property in Idaho. Yeah. That's a good property, by the way. Gold price wasn't cooperating. They drilled. The results were, they weren't anything to write home about. They weren't bad, but they weren't great either. And you can't have not great results if you just raised money and the commodity that you're looking for isn't cooperating price-wise. I knew that share structure could absolve one mistake. And luckily for us, the company did the smart thing and pivoted to lithium, and the rest is going to be history by the time it's all said and done, right? If you have a company that you're writing a check for and the share structure is already blown up, in loose hands, not with the right people, you're not going to be able to afford a mistake, and mistakes or misses, whether they're geological, jurisdictional wise, are more often the case than not in our space. Sure. And so it's important to know that, right?
So 1 in 10,000 projects becomes a mine or something like that.
Yeah, some guy wrote that thing like in 2015, I think. So anyhow, look, that's kind of our spiel on private placements. I would say this, look, I think we're in a very, very, very fertile environment for profits this year. I think as great as last year was, this year has so much to offer as well. And I think, I think it's going to be more widespread. I mean, you and I financed a lithium deal here recently at 10 cents, and we're writing a check at 50 cents now. And the things like at $1.10 or $1.05. This is all within a month and a half, right? That's a hot trend. We don't know what this property has yet. I suspect it's going to be really good. I suspect it's going to do real well. I think this company is going to be a $3 to $5 company by year end. I'll tell you the ticker symbol after the financing closes. But there's also going to be deals, that it's higher risk, but it's also higher reward. Again, there's a copper play, and I've spoken with management about doing a small round for us, and I want to be as aggressive as humanly possible because they control an entire basin. I think they're going to be drilling discoveries there for the next 5 to 10 years at the very least. And so when you have, and this is my last point, when you have that type of scale, bringing it back full circle, you want to bet enough to make it count if you're right.
Yes,
because it's risky enough allocating capital and missing. The last thing you want is to have a big win, percentage-wise, but maybe dollar-wise, it's not significant to you. Because then what's the point, folks? I mean, it's fun to play the game. I'm competitive. I love boxing. I love sports. but I want to win, and I don't want to win in percentage gains. I want those percentage gains to be accompanied by dollar gains. And that for me is something that as I mature as a speculator, as I mature as an investor, I'm being very, very, very hyper focused on. And it's why, like with my private placement service, Junior Resource Insider, I've gotten really selective in the last few months. I want to make sure these deals are vetted properly. I want to make sure I'm checking all those boxes, and I want to make sure they have the potential for scale, and that they allow my subscribers and myself the opportunity for a miss and possibly two misses, so that we give ourselves enough time in the right cycle to come back from that and maybe turn a Gaia Metals into a Patriot Battery Metals.
Yeah, good points.
I like it. Let's go where we normally go. Overall markets. What do you think? Same.
Same.
Yeah.
Okay.
We'll keep it simple.
It looks like we had a couple of down days this week. Earnings are still rolling out. That's what you asked me last week. What I was looking for. We're back into negative earnings growth territory. We were positive there for a little bit.
Mm-hmm.
Yield curve is more inverted now than it has been ever in the past.
69 curve. Keep 69 in.
Yeah, it's almost a full percentage point inverted. I mean, certainly 85 basis points or something like that. Recession is coming, and so be cautious out there. Gold is looking really good to me. We've mentioned it recently, but you've got the longer term yields pulling back. Gold consolidating in a bullish consolidation near the 1870, 1875 level. Doesn't take much to send that back up to near record prices. At which point, I think you'll get more speculative dollars coming into that sector. I'm actually reading a book. I think you said you read it. It was given to me while we were in Vancouver.
I love that book.
Oh, so you have read it. I'm like 100 pages in, and it's so interesting. It's about the Comstock load and how they consolidated it, and it just happened to be around the time that they got telegraph lines installed, so they could, essentially instantly get information to the big city, right, which was San Francisco, and how that created a speculative fervor. I mean, they were doing what we were just talking about for the first 25 minutes of this podcast, right? If they had 100 feet of the trend or 100 feet of the vein or whatever, they were selling it off foot by foot. So each foot was essentially like a share, right?
Yeah.
And they created what became like an exchange in the town, which is now Virginia City, Nevada. And, they were buying and selling and hustling. There's a section in there about how there's the Wildcats, which is basically moose pasture, like they weren't on the trend. There was the second class, which it had a pretty good shot of, hitting something was very close or adjacent to where they're already mining. And then there was the first class ones that, went for higher per foot because they had already hit the load, either at surface, outcropped, and where they, had driven and added and hit the things. So anyway, and then all that speculative capital came in because they could get the word out because of the Pony Express and the telegraphs. And so
I laugh because of how little has changed since
that's
then.
Exactly what I was going to say.
That's why I have the stupid smile on my face. I wasn't actually thinking of a childish joke for once.
That's exactly what I was going to say because, gold's a little hot. It's up $300 in the past couple of months. Crypto not doing as well has proven itself not to be the inflation hedge. And then you get this sort of M&A that's happening, right? You had Agnico and Yamana and Pan American recently. But more recently you had, and I saw you put M&A on there, so I guess it was a good segue. You had the largest gold producing company in the world, Newmont, make a bid for the fifth largest producing gold company, Newcrest, out of Australia.
17 billion. Back to my conversation about scale. Scale matters.
Exactly, and that starts to pique people's interest. So if you can get gold back to 2,000, which seems likely or probable this year in the realm of possibilities, it doesn't take much for more speculative cash to come into the sector and drive these stocks significantly higher. And we all this, but Rick Rule does a great job of reminding, and I heard him say this at the conference the other week. The average capital in the gold space is 2% of U.S. assets, the savings and investments. Averaged 2% over the past 4 decades, and it's currently at 0.5%, right? So it could quadruple just to get back to the mean, right? And that's a significant amount of capital in a very tiny space.
Quite a bit. Yeah. That's you want to do social commentary or just to wrap it up? So I was bored earlier this week, and in a random moment of fuck it, right? I turned on Joe Biden's speech about, a quarter of the way through, and I couldn't help myself. I got on the Twitter and I figured, let me just live tweet this thing, right? Look, Joe was smoking this speech. Now, let me be absolutely clear. I have no dog in the fight. I don't like either party. I think there's exceptions on both sides, but for the most part, they're all lying and they're all just counterfeiting money. And they're all just, in special interest pockets. And look, if you can get yourself a lobbyist, you can do very well. Being a member of either party, if you can't, you're probably getting screwed by both and don't even know it, right? But I'm watching the speech, and he was smoking this. Nick. He was clear. He was laughing. He was making fun of people. He got, I don't know how many bipartisan. I didn't know like there was bipartisan applause anymore. I thought that like ended when Obama became president, right? I saw several moments where Republicans and Democrats were up applauding. So for a guy that's supposed to die any day now, I thought he did really, really well. But there was a moment halfway through where I'm like, I had a drink and I was like, is he fucking trolling everybody? Or is he serious? Because he of course, was introducing Brandon Say, who's the gentleman that had disarmed the gunman in a mass shooting last month in California. And so when he says, I want to introduce Brandon, I couldn't help but just start laughing my ass off, like literally out loud, right? And I'm sitting there and I think I tweeted, is Joe trying to incite a let's go Brandon shit? Because the Republicans were so disrespectful during the speech. They were yelling. Marjorie Taylor Greene and her Cruella outfit was yelling that he was a liar. They were yelling that, the fentanyl crisis was his fault for his failure to secure the border. And look, however you feel about any of these things, man, there should be some decorum and there should be a little bit of civility in a State of the Union speech. And I think we're so far removed from that it speaks to where we are again in our political process. But I had a chuckle when he said, I want to introduce Brandon. In my mind, I was like, are the fucking Republicans going to get up and start going, let's go, Brandon, let's go, Brandon. And then it did happen, and then I said, all right, let me calm my eyes down. But that was that. I caught the speech. I thought it was a good one. Of course, some good points. There were some lies, like there always is.
Yep.
But look, he talked about police accountability, and we've talked about this a lot here. And he talked about retraining police officers and hiring better ones and paying them more. And he made a valid argument for at the very least having that dialogue in a way that even Republicans were applauding. There was applause from Republicans on the issue, and I think it's because he didn't get up there and just pander to all the victims of police abuse. He actually started by saying, look, we know that being an officer is hard. We know that, a lot of officers are very good people, but this has got to stop. This is way too often. And I thought it was balanced. I thought it was nuanced. I thought it was a great way to further that dialogue. I was encouraged by that. And then, the rest of it is just kind of like, the dog and pony show, right? You just kind of look at it and you have to laugh because it's half truths with half lies. And most of this stuff will never come to pass. And the only thing that they're going to agree on is increasing the debt ceiling because that's what they agree on every year. And then we'll have a new political cycle coming up here soon that I'm not too hopeful about. But hell of a speech and good job, Joe. I thought he did great.
It was quite entertaining. If you had your popcorn, you could have had a hell of a time. Lots of finger pointing and shouting of liar by some Congress people. I wish he would have asked for the ending of qualified immunity as it relates specifically
Agreed.
to the police, but understand how you got to tiptoe around that issue. Did enjoy how he roped in the other side on Medicare and Social Security. Getting them to say, that they had no intentions, not say, but just by their reactions to what he was saying, imply that they weren't going to touch Social Security and Medicare. And so, he ended up saying, well, we're good. We're all in agreement that we're not going to touch Social Security or Medicare, which of course they're going to try to go after in the budget fights.
And he's going to hold it against them.
Right. Yeah.
Yeah. He's going to play the clip.
But thoroughly entertaining. I enjoy watching. I enjoy reading the tweets. I enjoy, reading the tweets from both sides, right? And how simplistic they make it seem with their 100 and however many characters they can put in a tweet, right? Like you said about the fentanyl or the immigration. And this is Joe Biden's fault. And it's like, well, okay. But there's probably more nuance to it than you can put in a single tweet blaming somebody. So I view it as a dog and pony show for sure, but it was entertaining.
I like it. What are we watching for this week? Everybody knows what I'm watching for. I think we got results from Patriot coming in the next 7 days from CV13. Look, if you look at the lithium, spodumene-bearing pegmatites, and you look at the widths that have been reported on the website, you know you're going to get a lot of 20, 25, 30, 35, 40-meter hits of what I hope is some damn good lithium mineralization. And look, I was looking at a map the other day. Pete on Twitter and on CEO.ca does a really good job of putting together all the publicly disclosed info. And it looks like a 1,250 meter trend of if there's mineralization, and it looks like they've hit on every hole. It looks like they've already outlined 1,250 meters of this new CV13 trend. Again, if you're getting 15, 25 meter, 35 meter, 40 meter hits of 1% and above, and you've already outlined 1,250 meters of this stuff, that's adding tonnage really, really quick. And we're not even talking about the stuff going on in the east, where they've now confirmed there's 4 rigs drilling out the eastern extension of what they now call the Nova Zone, which is this freakishly high-grade zone that's returning some of the most spectacular drill results I think any lithium company has ever produced. So I'm excited for those results, and I think we're going to get weekly news flow on the results side from here on in. And of course, there's a lot of stuff going on behind the scenes with the rumors and kind of confirmed now that somebody wants 19.9% of it. I think it's going to move some of the bigger companies to pay attention and maybe get in there. And I think it's going to be Boise's Bay 2.0 here again.
Get out your shoe.
That's it.
I continue to watch the broader markets. Again, I think that we're still in a bear market. I mentioned those short-term expiring options recently that, now a lot of other people are writing about. There's been articles in the Wall Street Journal, articles in the Financial Times. I was reading something this week that said those short-dated 1 and 2 day options were responsible for as much as like 75% of the notional value of options traded on a given day. And just to further explain that, right, that sort of begets buying, and they're sort of, writing these calls, getting the market to that price, which creates further buying in the market. And that's the reason the market has been able to get above its trend line and suck people so deeply into what, at least to me, is a clear bear market rally. I've inverted yield curve. I already mentioned recession is going to come to pass. That's not necessarily in the next week. But getting all pulled up on gold is what I should say. And I've talked myself into it. I think that, it's got a good shot of going much higher. It's got all the narratives going for it, the geopolitical instability, the Ukraine, Russia, China. But you're going to have a debt limit fight that's going to potentially give gold a tailwind. You're going to have a recession that's going to potentially give gold a tailwind. You've got long-term bond yields softening, which is going to potentially give gold a tailwind. And you've got a pullback at the same time in gold, right? It ran to 1900 and pulled back. I think, to answer your question about the next week, I think it's don't waste this pullback in gold is what I'm trying not to do.
Coiled spring and love myself some good tailwinds. I am Gerardo Del Real, along with Mr. Nick Hodge. This was the 205th episode of our weekly therapy session we call Investing in Bizarro World. It's supposed to always remind you to go ahead and go to dailyprofitcycle.com/subscribe to make sure that you're getting all of our updates and market commentary straight to your inbox. Mr. Hodge, words of wisdom.
Especially if you or anyone you know would potentially be interested in private placements. It's become a specialty of ours, and it's a relatively niche thing, and I like to think or say we do it well. So by all means, reach out. See ya.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.